So on the graph here, we're looking at a situation where an employer offers a group LTD or group long-term disability plan that is 60% up to 10,000, which is a common plan that I see fairly often being offered by the employers. And what this graph represents here, you'll see several of the dots on the graph represent highly compensated employees that are underinsured. Simply, when you offer a plan that's 60% up to 10,000, that's great for providing a cost-efficient, broad level of coverage for all employees, but it does leave the highly compensated employees earning $200,000 or more a year underinsured when it comes to disability insurance coverage. So we take a minute here and let's focus in on the executive that's being circled here that earns $400,000 a year. As you can see, when a highly compensated employee earns $400,000 a year, they are not actually getting 60% because they will actually hit that $10,000 a month cap first. So because that cap exists, that means that's the maximum that the group LTD plan will pay out. This leaves this particular executive at a 30% income replacement ratio. So while many of the other employees at this company have a true 60% income replacement ratio in the event of a long-term disability, this particular executive will be left with a 30% income replacement ratio, which is a significant earnings cut. And that's not even bringing into consideration taxability. So if the employer is offering this plan as employer paid and is not grossing up the group LTD premiums for these highly compensated employees, then that group LTD would also be taxable as income. So that $120,000 a year maximum would actually be even less by the time it is paid out to the highly compensated employee that might be going on claim. Bottom line is there are a lot of employers out there that have no idea that this coverage gap exists in their plan. And I highly recommend all benefits consultants, brokers, and advisors take the time to go have a conversation with your employer clients, lean on some industry resources that might be able to help illustrate this type of coverage gap for your clients. And that way your clients can make an informed decision